Now, I mean, when it comes to RWA, we are seeing that predominantly right now it is all about money markets going on chain. But the hard assets, which are, if I talk about real world assets like real estate, or if I talk about maritime, if I talk about hard assets, somewhere they are not having the same level of adoption as the money markets. What is your kind of view here? I mean, are you also seeing a similar kind of a trend, or is it am I wrong there?
Yeah, I think there's two things that need to be looked at when it comes to RWAs. One is regulatory, and the other one is pricing of the asset. So real estate is one that, I back in 2018 and 19, I spent hundreds of hours on like real estate tokenization. I was a lawyer back then, and everybody wanted to tokenize real estate. I spent tons of time on it. I actually at one point was working on building a company that would help on real estate tokenization, but specifically solving what to me is the problem that makes it so that real estate cannot be tokenized in a useful way today, and still can't today, which is due diligence. Like when you buy $100 million property, you don't just buy it like you buy like a token. Like you need to know like whether there's environmental issues, whether the thing is completely run down, whether there's actually like tenants in there, whether some storm came through and like half the buildings was torn down in the last week. Like you need to like know like a lot of information, because it drives like value, and it's not just digital information, it's like actual physical information. And so to me, like you could tokenize as much real estate as you want.
Hello, hi everyone. Welcome to yet another episode of Voice of Web3 powered by CoinGape Media. Guys, I know it's a difficult time. I know it's quite volatile in terms of investing particularly. But yeah, cryptocurrencies are showing some positive signs. And we do hope that in the coming days, there is some positive news in terms of the war. And hopefully, we will get the bull run that we all have been waiting for. But guys, this year 2025, 2026 is all about institutional adoption. And when it comes to institutional adoption, there is one particular project, one particular company we have been kind of, looking after we have been tracking for last few years and months now. And they have shown some remarkable achievements. They have shown some remarkable progress when it comes to how they're handling the whole stablecoin, TAT, and institutional adoption narrative. So guys, today we have Marc Boiron with us. He's the CEO of Polygon Labs. For the people in Asia, they're very much aware of the Polygon project. They know the Matic token, which was then translated to POL. Polygon, as we all know, has become one of the most widely used blockchain ecosystems, known for its layer 2 scaling solutions that help Ethereum faster and cheaper. And under Marc's leadership, Polygon is pushing forward initiatives like Polygon 2.0, ZK technology, and infrastructures for real-world asset tokenization and global projects blockchain adoption as well. And Polygon right now is definitely one among the most chosen blockchains when it comes to basically making transactions using stable coins. They are one of the most, let's say, economical blockchains which developers prefer across the globe. So Marc, welcome to the stage. And we are so glad to have you today here.
Thanks for having me. Very excited to be here.
So Marc, before I begin, congratulations. You recently acquired CoinMe. You recently acquired Sequence as well. And I do know about both these companies, so I know how big of an update it is. And I'm sure that investors across the globe are very glad about it. So congratulations.
Yeah, thank you. Yeah, we're very excited about it. I mean, it provides like I think very unique set of capabilities that most blockchain infrastructure builders do not like venture into. I think the payments world so deeply, and so for us, it creates like really good opportunities for products that are unique, that are going to make it even more desirable to use Polygon.
Yeah, I mean, so recently I was having a discussion with my tech team, and we were actually trying to advise a blockchain for an RWA project. And we were comparing Ethereum versus Solana versus Polygon. And the debate took hardly 5 minutes. Polygon was a winner there because of, I mean, it's first of all very economical, easy to test with, and then the kind of updates that we are seeing right now in terms of the regulations, in terms of the proprietary, as well as in terms of, let's say, the kind of adoption you guys are having when it comes to acquiring these companies. So, Mark, I wanted to start and help. So these updates, for some reason, I personally believe they are not that publicized right now. Maybe the team is focused on building. Maybe that is the reason we are not seeing that level of marketing efforts towards these, publicizing these updates. But I wanted to know from your side, why so much emphasis on payments? Why so much emphasis on stable coins?
Yeah, it's a good question. It was probably about 12 months ago that, what we realized is that like every blockchain was becoming relatively commoditized, right? So if you go back 4 years ago, you would think of what's a fast, cheap blockchain. And the only thing you could think of was Polygon, right? You fast forward today and you say, okay, what's a fast, cheap blockchain? You can name 100 of them, 200 of them. And so that's not like a unique capability. And what that means is that you need to find something other than that to be strategically well placed. And when you look at like what the options are, one of the obvious things is building a blockchain that is better for one specific use case, right? That allows you to build the block space in a way that's better for it, tooling that's around better for it, and just products that people want to use in connection with that chain. And we went a little bit back to the drawing board and looking at like, where is it that we're very strong? And I think there's two things that stood out. One is, Polygon's been known for working with enterprises for a long time. We have a lot of relationships with enterprises, and they're the ones who are now ready to adopt stablecoins at scale. And so I think we're very well positioned to do that. And then second is, we just looked at where we already had traction, and we were very good at payments already. And so we thought if we double down in this area, then I think we'll be able to create more demand for the block space than if we were just try to do a little bit of everything the way most blockchains try to do it.
So I mean, when I look at Polygon as a SME or as an enterprise, let's say I have 100 odd employees in my company. I do have remittance as one of my services. And so how does, as an enterprise, I mean, I should be using Polygon today?
Yeah. So the way that today somebody uses a Polygon or another blockchain in the payments context is actually a little bit convoluted. And this is why we made these acquisitions. Right now, when a remittance company wants to use a blockchain, what they do is they go and they talk to a blockchain. And they come to Polygon and they say, hey, what do I need to do? And we say, okay, well, you're going to need to work with the blockchain, like on the blockchain. You're going to need to work with an RPC provider. You're going to need to work with a wallet provider. You're going to need to work with an interop provider. You need to work with an on-ramp and off-ramp. And that feels like a lot. Not only that, but what'll end up happening is we'll make recommendations for who they should work with. But once they start exploring, they start being given like many options all over the place. And suddenly they're talking to 30 different companies and they're completely lost as to what to do. And this is part of the reason for the acquisition, is that we really wanted to be able to provide like one full stack that would be available. So now when you come to Polygon, what you get is the ability to use one blockchain that has a wallet with it, that has on and off ramps with it, that has interoperability built into it. You get it has an RPC provider, like you have a whole solution that is available. And now you just plug into one API with one company that you work with, and you can launch in a couple of weeks instead of launching in like months and months and months of discussions. So that ease is the type of thing that like a remittance company wants. They don't want like 7 different integrations and months of exploring. And so far we're seeing like very good feedback from those types of companies for that reason.
So one thing, I was actually researching a bit more to kind of, have a very good discussion with you. And out of all the research, one particular sentence that kind of stood out, and that no blockchain actually tries to say on their website, and you're very bold to actually kind of, just write it down even on a website. It was basically Polygon Labs becomes a revenue generating blockchain payments company. And this is where, my eyes, I was so glad to see it that finally a blockchain company is finally talking about revenues. They're finally talking about some form of investor material that is not just about hype or speculation, or maybe something that will be fruitful in, let's say, 10 or 15 years. So I wanted to just kind of, get your thoughts on that as well. What do you mean by this when you talk about that Polygon is now a revenue making company when it comes to payments?
Yeah. So if you think about like how blockchain like development companies have historically worked, they will go ahead and sell tokens, raise money.
Yes,
They'll use that money to pay salaries and like grow, and
we
then
do
they need
that.
to sell. They need to sell more tokens later so that they can
Mhm.
continue to do the same thing. And what that does is it just puts like downward pressure on the token, right? Because like you can't pay people without actually having a means of paying. And so what this allows us to do now is actually generate revenue that doesn't actually require selling the token, because we can actually become revenue generating and then eventually even profitable. And now we can actually just be self-sustaining. That allows for now the token to fully benefit just from like the growth of the chain. And so now what we get to do is we get to use revenue to grow transactions on the chain, which just drives more value on the chain. And we've been seeing this, right? So if you look at transactions on Polygon, right now, I mean, there's more than a million polls spent a day right now on
Mhm.
Polygon. A significant portion of that is getting burned, literally just making poll deflationary right now. And so, if we could continue to do that successfully, then basically what you see is we don't actually need to sell any poll, and instead we can go ahead and use that revenue for growth, and poll can continue to get burned as we continue to grow successfully.
I mean, yeah, interestingly, recently our investor group, we were trying to understand that the token versus the equity that is available now. So you can buy Circle, you can buy Coin, these kind of stocks, of course, on NASDAQ and other places. And on the other side, we have these 10,000 odd cryptocurrencies still available to be traded on Binance or maybe Coinbase. And there, interestingly, somebody proposed an idea that Pole is also a stablecoin company. Pole is also an infrastructure company now. Pole is not just about basically a token that will give some value in the coming days or maybe in the coming years. Pole is giving value today. And interestingly, we all did that analysis and we found that Pole is so undervalued right now because, I mean, as I said, these updates are being marketed at that scale right now. So not everybody knows that how far ahead is Polygon when it comes to stable coins, when it comes to payments, and now integrating that with these basically compliant and regulated products like CoinMe, that gives you a very good investment thesis, to be frank. And this is where I wanted to get your views as well. That if somebody today who is holding Pole as a token as an investment, I mean, how does this all? So you already explained it that there is a burning mechanism. There is already, let's say, if there is a revenue, it can be the tokens can be burned accordingly. Can you just give us a bit more explanation around it? That how is this all development that we are seeing on the institution side is getting translated into the pole value?
Yeah. So it all comes down to whether we and others in the community are able to successfully help drive
Mhm.
transactions on the chain, right? All the transactions are fees that are being paid, and those fees are what benefits Poll, right? And so you can split the fees into two different categories.
Mhm.
One is the base fee, and the other one is the priority fee. And the way to think about this is all of the base fees is all getting burned. And
Mhm.
when you look at the amount being burned, what you're talking about is a pretty significant amount in like right now. And so you end up with a situation where when you look at this on a monthly basis, what you see is more poll getting burned than getting created. And so that alone, right, is beneficial because the poll supply goes down, and that obviously means that demand being the same, the price of poll should go up. So that's on the base fee. Then there's priority fees,
Mhm.
and the priority fees get actually split into two. 24% goes to the whoever is running the block producer. Currently, Polygon's running the block producer, but validators can pick who runs the block producer. And then the rest of it goes to validators. Right now, this has been like this since Polygon has existed. Historically, fees have been low enough that validators needed that priority fee to actually make it make sense for them to run the network. As priority fees have increased, what we actually see is that validators are making like a significant amount of money. And one of the things that we're actually currently exploring is the idea that a portion of those fees would just go to the stakers instead. So rather than stakers just receiving the inflation right now, let's say 3.5%, they'd be looking more at 8 to 10% based off of current fees. And so when you look at that, that becomes even more interesting. So right now, I think pulls my perspective like interesting for like the burn potential. And I think shortly what we'll see is it won't just be for the burn potential, it'll also be actually the fees earned from staking in and of itself as well.
Interesting. I mean, if there is an incentive of around 12 to 13% on an annual basis, even, I mean, it's huge. It's huge, to be frank. And poll staking has been on a rise. I'm seeing. I mean, I can see fundamentally that people are adopting poll at a very higher level as compared to 1 year back or 2 years back. And this new narrative, which is mostly around institutional adoption, is really helping out poll. So again, I mean, congratulations to you and your team.
I appreciate it.
So Marc, next part, of course, I mean, we understand crypto has been dear to retail investors from day one. It was all about retail investors having fun around it. And finally, some of them actually taking investment seriously. But it was all a community which had nothing to do with Wall Street. So I'm sure you understand when we hear words like institutional adoption, DATs, these are highly complex. And it can scare away most of the retail investors. They understand, okay, this is now out of our hands. We shouldn't be here. This is not a place for us. So how do you kind of, take when it comes to Wall Street versus crypto native projects? I mean, do you see this as kind of a theme in the coming years, or do you still see a place where retail investors can still have an edge?
Yeah. Look, I think we need to separate between two things. I think one is retail when it comes to the token versus retail when it comes to actually building on the chain. And same thing for institutions, right? I think when we on the Polygon side, like when we talk about like institutions, a lot of this has to do with institutions coming to build on Polygon, whether that's RWAs, whether that's payments, and really going ahead and like driving more fees. I think that there is a benefit to institutions obviously being involved in the token, but the reality is that other than Bitcoin and like ETH to quite a degree, there's no token that like institutions pay significant attention to. And you could see this with like the DATs, right? Like DATs were the whole crazy thing, all of the second half of last year. And the reality is, if you look at where those DATs are today, they're not looking very good. And the only exception pretty much across the board is BTC and maybe some of the ETH DATs, but very little. But other than that, it's looking pretty ugly. And part of that's just the market, right? It's hard to judge it on a short time horizon. It's just the market's been bad overall. But part of it's because there is no institutional demand yet for assets really outside of BTC and ETH. And so I think that that's going to change. But right now, my perspective is like when you're looking at like, Pol and another crypto as an asset, outside of BTC and ETH, like you're still talking about a retail dominated market where there's plenty of alpha to be had, simply for those who actually are paying close attention and understand projects deeply, because like the institutions aren't taking the time. Now that's very different from the institutions actually building on the chain, right? Like when we look at who's building on Polygon, right, from the BlackRocks and the Revoluts, and you can keep going down the list. That is a lot of teams. And the nice thing about that is it's actually retail benefiting right now, right? Because retail gets to benefit if a token ends up being successful from the institutions that are actually building on chains. And so I think there's definitely still like a retail play to be had. But I'm no like trading expert or anything of that nature. So take what I say with a grain of salt.
So I mean, definitely the equation is far more complex now. I mean, it's not just about now following updates. It's more about seeing the, and you're doing a good job at it. I mean, when I went to a website, I could clearly see that you're trying to emphasize the real value, the real revenues, the real adoption level things, and which is really good. I mean, which it makes it really easy for everybody to see that what you're trying to do. But I mean, there is always a fear, when you work with institutions, that what if they copy us? What if they can do this on their own? I mean, why not? I mean, if BlackRock today wants to launch a layer 2 blockchain of their own, why they don't have any restrictions, right? They can do that. So when it comes to, again, the same debate that, okay, maybe institutions today are trying to learn from this ecosystem. I'm talking about my personal experience. I mean, we were advising a few RW projects, and initially we saw a lot of enthusiasm. But as soon as the tech part was over, we could see the debates shaping a different shape there, because these institutions do not have any lack of resources. So how does Polygon, how is Polygon actually trying to still manage an edge there? Do you see a lot of institutions coming out with their own ecosystems, own blockchains, or do you really see them in the long run adopting blockchains like Polygon?
Yeah, so I think it's going to be a split. I mean, we're talking to the institutions all the time, and the reality is right now they don't have the expertise in most cases, and they come to us for that expertise. And that expertise is either going to translate into them coming, onto Polygon. We maybe it's even using one of the products that we've acquired, and they're going to choose to use those, which by default is on Polygon. But it's it's not only on Polygon. So one of the things when we did this acquisition that we released was this announcement around the open money stack. And it's really this single API that has like all of those components we talked about earlier, right? The blockchain, the wallet, the on-ramping and off-ramping, the interop solutions. But what's part of that we don't talk about a lot, but we talk to institutions about it a lot, is it also includes the chain development kit, or Polygon CDK. Polygon CDK is our way of letting and helping enterprises launch their own chains. And so when we think about it from that perspective, we're like relatively agnostic on, do they come to Polygon, the chain, or do they use Polygon CDK? And the reason for that is if they use Polygon CDK by default, they're using the Polygon interop solution that we call AgLayer. And when they do that, that is something that as it grows, the value is going to be captured by Pol, and Pol holders benefit from it. And so we don't care if they choose to launch their own chains. We want to do that with them. And when they do, it just enhances the entire Polygon ecosystem. So I don't view it as like, us versus the institutions. It's how do we actually help the institutions in a way that is, consistent with like our goals at Polygon.
So Marc, in terms of institutional adoption, if I were to understand the key areas where Polygon is excelling today, where Polygon is, let's say, dominating the market, what would be those 2-3 major areas where you are seeing so many of requests from institutions?
Yeah, I mean, it really comes down to like payments for us. And yeah, it's huge, and specifically, it's hard to like point to one area, right? So the institutions we joke all the time, like it's not our first trillion. Like we've done over almost $2.5 trillion of stablecoin volumes, and a significant portion of that is payments, including through like very large players like Stripe and Revolut. And so a very big driver of this is payments, and the type of payments things can vary a lot. One will be a bank that either wants to leverage stablecoins or more likely wants to offer stablecoins to their customers. They don't want to put their licensing at risk, and so they don't want to touch stablecoins directly. So they want to work with us to be able to like help move those stablecoins right around the world. It might be, neobanks and fintechs who want to
Yeah.
offer to their customers the ability to like on ramp and off ramp, and the ability to again move money around the world. In some cases, they recognize that there are lots of blockchains out there, and while Polygon's great, there's some users who want to use other blockchains. And so, being able to work with us with an interop solution that allows you to go cross chain is something that ends up being desirable. And then there's just enterprises in general who either they want to pay out developers, they want to pay out creators, or marketplaces that need to pay out like a large number of participants in their marketplace around the world. All of these are things that like are growing right now on Polygon. Payroll is another one that's really interesting. And that's where we're seeing like a significant adoption. The second place that we see a lot of adoption, but not nearly what we see in payments only because of the amount of success we've had in payments, is just RWAs more broadly, right? When it comes to, products like Biddle, Acred from, Apollo, we do see like quite a bit of RWAs coming to Polygon. And part of this is because of our thesis, which is that we want to move all money on chain. That's like our mission. And to do that, you need to have things to do with the money on chain, right? And so like, what are the things that you typically want to do with money on chain? You want to earn from it. You want to be able to like invest it. And so for us, when we're able to say, okay, so we have, the ability for you to move your money on chain. And then by the way, you can hold that money on chain because you can then, buy with USDC an ACRED position, and you never need to move it off chain. That is like very, very desirable. So payments is by far biggest use case. It's where we're focused. Polygon's very strong on that. But the secondary one is really like the RWAs that fit well together with those payments.
I mean, RWS definitely. I mean, there is so much of FOMO around it, so much of misunderstanding as well, to be frank. I mean, for some reason, the crypto euphoria have given people a very different narrative that once you're on chain, things become 10x or 100x, something like that. As soon as you're on chain, you have this whole almost free liquidity available for you. Now, I mean, when it comes to RWA, we are seeing that predominantly right now it is all about money markets going on chain. The assets that are already tradable somewhere, they are finding a place on chain, and they are just kind of increasing the accessibility. They're increasing the 24/7 kind of the benefit that you have with crypto. And what we are seeing it, but the hard assets, which are, if I talk about real world assets like real assets, real estate, or if I talk about maritime, if I talk about hard assets, somewhere they are not having the same level of adoption as the money markets. I mean, bonds, treasuries, and even stocks. We are seeing a tokenized version of them everywhere. And I do see that since they are tradable, there is a pricing already there. It is far more easier to bring them on chain. What is your kind of view here? I mean, are you also seeing a similar kind of a trend, or is it am I wrong there?
Yeah, I think there's two things that need to be looked at when it comes to RWAs. One is regulatory, and the other one is pricing of the asset. So real estate is one that, I back in 2018 and 19, I spent hundreds of hours on like real estate tokenization. I was a lawyer back then, and everybody wanted to tokenize real estate. I spent tons of time on it. I actually at one point was working on building a company that would help on real estate tokenization, but specifically solving what to me is the problem that makes it so that real estate cannot be tokenized in a useful way today, and still can't today, which is due diligence. Like when you buy $100 million property, you don't just buy it like you buy like a token. Like you need to know like whether there's environmental issues, whether the thing is completely run down, whether there's actually like tenants in there, whether some storm came through and like half the buildings was torn down in the last week. Like you need to like know like a lot of information, because it drives like value, and it's not just digital information, it's like actual physical information. And so to me, like you could tokenize as much real estate as you want. If investors can't actually diligence it, then it's not interesting. Now, this is why I think the more interesting path that I am surprised we haven't seen more, but it ties into regulatory stuff, is REITs, right? When you think of like real estate investment trusts, like now you don't need to worry about, like, if one property got hit by a storm out of like 10,000, it doesn't matter. Like that happens. You take that risk all the time in the public markets. You don't get real world, like, second to second updates on what it's like. You get like quarterly updates on, you know, the position of the REIT, and you invest based off of that. And so that makes it a lot more viable. So that's like one, is like these structural issues around the assets. The second one is regulatory. It's just like, it is not super clear, and hasn't been. I mean, the SEC's starting to be much more clear on this, especially in the last few months. But like, what does it look like to tokenize some kind of security? You know, if you go back 2 years ago, tokenizing a security, the position that the SEC was taking was literally a worse product than the non-tokenized version, because you had to do everything that you do with the non-tokenized version, and you had to do the tokenized stuff on top of it. Like, and I think that there's some telltale signs of when it is that we're going to see things take off. A good example of this is, like, most stocks have transfer agents. And right now what you need is, you need a transfer agent that is actually like off-chain tracking the movement of the on-chain stock. I think the day where we say blockchains are your transfer agent is probably the first step for me to, okay, tokenized equities are actually like really, really interesting now. So look, it's going to happen. It's like abundantly clear, but it is a regulatory and then some structural issues that need to be addressed. And I think the regulatory issues are actually starting to be addressed pretty aggressively, at least in the US, which is great. The structural issues on some of those assets, I think, is still more complicated. And money market funds just don't have those structural issues or those regulatory issues that limit them in the same way, which is why we've seen significant growth there.
Yeah, so I mean, and the debate is very much different when you're talking to somebody in US versus when you're talking to somebody in a developing country like India or maybe Vietnam or Indonesia. The debate is completely different. You know, I mean, in the US, they want to take the risk. I mean, I have seen that personally. While in other parts of the world, they may want US to do something first. So if in case there is a regulation around something in the US, they will be more happy to experiment that with you. But your REITs point is, but I mean, with REITs, you're completely right. I mean, right now we are discussing one project in India, which is a POC with Maharashtra government there. And the problem is that we are right now spending so much of time helping them understand that this is not REITs versus InvITs versus tokenization. This is not like that. We want to tokenize your REITs, but it is taking so much of time to help them understand that this is not about replacing REITs. No, it is not about that. We don't want to go through all the regulation that you already have done. We don't want to do that. Yeah. But again, I mean, you are right that there has to be a progress on the regulatory side as well as on the side of blockchain acceptance in terms of settlements as well now, not just about transferring value from one point to another. But when we talk about Polygon particularly, I mean, are you also seeing this interest from government side, or is it just right now private in a wider scope of things?
Yeah, it's government for sure. There's several sovereigns that we'll be announcing stuff with, yes. in like definitely this year, probably earlier rather than later. They're very interested. I mean, I think again, like in the last year, the floodgates have opened in the understanding that currently just exists in the market. I think it's like you were talking about, like the challenges that you've had, and I think there is still like an educational challenge to some degree. But I think for many others, they now understand the value. They see that, you know, in some cases, it's nothing other than you have a shared ledger, and having a shared ledger makes it way easier to transfer things than when you have separate ledgers, or when your ledgers are not even, online at all. And so they're like, hey, if I can actually just reflect this thing on a ledger that like many people can share and see and easily access, that is going to be a better approach. And so a lot of that has to do with like Polygon CDK chains. It's sovereigns wanting to launch their own chains for a specific set of purposes, more than on POS. But we've also seen, like, whether it's we've seen a decent number of efforts from the government around, you know, things on Polygon POS. I think like we've had tokenizations of like motor vehicle records, for example, things of that nature. So I don't think that's going to like die down, but I think the big difference is moving from the just POCs to also moving towards like more like very complete projects that they view as like crucial to what they're doing. And we're talking about a lot more of those now than we were a few years ago.
Yeah, I mean, yeah, but of course, I mean, Polygon is again way ahead. I mean, the kind of adoption you have, at least I am seeing Polygon. So whenever we go to any, whether it is institutional investor or whether it is a bank or a government, the good thing is they already know about Polygon in one way or the other. In the last, I guess, six to 7 years, you guys have done amazing job when it comes to connecting with developers. And some of these developers are running their startups now. Some of them are big companies now, which are still using Polygon. And the kind of awareness and knowledge you have shared, even with the governments, I mean, it may be just a knowledge sharing session sometimes, but the level of awareness for Polygon is far more ahead, I'm seeing, especially in, of course, APAC region, if I were to share my experience. Mark, moving on, our discussion cannot be completed without talking about AI. I mean, it cannot be without AI. So there is a popular debate, popular narrative right now on Twitter that right now the crypto is moving more to AI related topics, AI related narratives. And there I wanted to know from your side as well that what are your views when it comes to this blockchain plus AI kind of a product roadmaps we all have in our minds. And we see these AI agents actually coming into picture, handling most of this real-time transactional part, and also kind of helping us with some form of automation abilities, because of course blockchain can sit at the level where blockchain becomes the verification part of things, while AI agents can actually help you do these cross-border transfers. So what are your observations, Mark, when it comes to blockchain plus AI?
Yeah, I mean, to me, it's the most obvious combination that exists out there. It's a no-brainer. It's not to say that like agents can't use things other than crypto, right? Like, you give it access to your card details and it can leverage those. But the difference is the issues that you're going to run into, right? When, I don't know, you're trying to execute a transaction with a card and your agent wants to transact, you know, multiple different addresses, and now, you know, that gets flagged and they can't actually execute the transactions, and so on and so forth. You know, crypto is the only option out there where your agent actually has full control over, you know, all of the spending, and you can put controls around that, right, to the extent that you want. And you've got internet native money, and agents are native to the internet. The internet native money should be used by those agents. So I think it's definitely going to take time, but to me, it's obvious. So we've been like very active here. So we do a lot with like X402, and there's quite a few X402 transactions that flow through Polygon. I think it's really between like Solana Base and Polygon is where you see kind of almost all of the X402 transactions happening. But there's some things missing, and to me, a lot of it's been around like wallets. And so yesterday we actually ended up releasing like a kind of like agent CLI. And the whole idea was, how do we give agents one tool that they can use to go make payments around the ecosystem as a whole? And so with this, what you basically get is you get like a smart wallet. This is through like our acquisition of Sequence, and you can put like on-chain session limits on it, and you can have gasless payments involved in it. And so you basically can put controls around the wallet in a way that actually allows you to, you know, not worry about how it is that your agent's spending, right? You can go ahead and, you know, get like top up your funds when you need to by like having like bridging and swaps integrated in it. There's like the ability to like, do index and RPC queries as part of it. You can register with 8004 for like you have your agent like discovered, and then like we actually, as part of this, we actually included like rebates for agents, so you can do like X402 payments for free. So you look at this and you basically have like a complete package for agents to like now safely be able to go ahead and actually execute transactions. So it's open claw going to town now to be able to spend money, but in the way that you've defined for it.
I mean, this is huge. This is huge. Is this available for testing for everybody? Is this public?
Yeah, it's available. We announced it yesterday, so it's available in production actually. So people can go use it.
This is Agents COI.
CLI, yeah.
Wow.
At Agents
this is
CLI.
huge. This is huge, Mark. This is huge.
Yep. Yeah. It's really exciting. The biggest thing is how we get agents to actually discover it, because the whole idea here is that agents can actually spin this up themselves, right? You actually don't just need people to be able to do it. I mean, you can have both. You can have agents do it on their own, or you can have people like set it up for them. So I think that the discovery is the hard part, right? There's so much noise in AI in general, and so how it is that you actually get, I think this is the problem that everybody's trying to solve, right? Like, how do you get agents to actually like discover these tools that actually make most sense? And I think generally the easier you make it, the more likely they are to actually be able to adopt it, because they don't have trouble finding it. Now it's just a question of like, how easy is it for them to use, which is really where we spend our time.
I mean, so we are already seeing these workflows. For example, if I talk about us, I mean, we publish a lot of content using WordPress, and we do have a lot of payment POS when it comes to on the website, point of sales, where we do try to, let's say, navigate the payments part of it, whether it is right now USDC or USDT. And there right now, you don't see any kind of a framework which can be utilized in these, which can be embedded to these existing workflows. So for example, we trying to, let's say, publish something. So right now our news part, everything is automated using OpenCloud. Again, we do have workflows, and I do see you can integrate this directly there, and you don't need any kind of separate new workflows to be built around payments. This is huge. This is huge.
Yeah, super exciting. Check it out. Let me know what you think of it.
I will definitely check it out, and I will ask my viewers as well. I mean, guys, I mean, I don't know how technical you understand it, but try to understand it from a point of view that there are right now, let's say, billions of workflows globally that are being used. And if even 0.1% of them can utilize this agent there, it makes their life very easy in terms of at least accepting USDC or transacting into it. So Mark, amazing, Mark. We both understand still a lot of people would be listening to this podcast to kind of understand, of course, the Polygon ecosystem, new updates, but they will also like to know Mark as an investor. Now, this is again, not any kind of advice, not any kind of financial advice, but still, if I were Mark, then what are the next 3 narratives you see in crypto that you're very bullish about? I mean, so earlier it was NFTs, then before that it was ICOs. Recently, it was, of course, DeFi, and now we are seeing stable coins, RWAs, DATs, so much of hype there. But Mark, what are the top 3 trends you are bullish on in crypto for, let's say, next 5 years?
Yeah, I mean, it's hard not to go back on a decent amount that we've covered. But I mean, number one is payments, right? Like, I just think, look, I live that every day. And the way that I look at this is in the next 10 years, we are going to move all money that currently exists on chain. That is, when you really think about what that means, it means taking trillions of dollars that currently exist in the market in terms of like market value of companies and converting that value into value that is captured on chain. And that opportunity, very hard to think of a much bigger opportunity than that. So that's the one to me that like really, really stands out. And like, that's why we focus so much on like the open money stack and make it incredibly easy. Because the easier we can make that to just plug into one API and now be able to move all money on chain, that's like beneficial. The second one is, again, at the intersection of AI and crypto, like period, very easy. I do think that like that narrative got hurt a lot last year because like to me until November, AI sucked. Like it was relatively useless. Like, I know people were really bullish on it. Like, I was not. I was very much of the view of like, this is actually not that useful right now. It will be, but it's not. I think as of November of last year, like, that completely changed. And now it is. And so I think what that means is that the types of projects that you're going to see at the intersection of like AI and crypto are going to be significantly better, right? This is one reason why we at Polygon spend a lot of time at that intersection between AI and payments. But there's just going to be like a broad set of companies there that I think are going to do incredibly well. And then the last one that I think is the whole like DeFi mullet thesis. So not like DeFi as a whole, like, I think is going to be fine. But I think when we think of like what's really going to do well, it's that. And the simple reason is because as more companies come in to, payments and to, RWAs, they are going to want to like do more on chain. And so what is that going to look like? It's going to be, centralized big companies offering, an extended product to their users, which is basically the ability to earn on chain. And that is the whole kind of like DeFi mullet thesis. And, have kind of like CeFi in the front and DeFi in the back. And so to me, these are like they're nothing like revolutionary, but I'd say like very clear that these are going to be huge drivers. And the question to me is just what speed does this happen at? And I think last year I would have said this is going to happen with very little time frame, whereas now my answer is like this year, I think definitely the first and the last category like is going to just absolutely explode. I think AI and crypto it's so hard to define when what is going to happen. All you know is that it will explode. The question's like when. And I'm not sure it'll be this year yet, honestly. Like, I think we'll see a lot of excitement. We'll see a lot of like novelty. We'll see, folks releasing things like we did recently. But like actually seeing like agents doing significant volumes, I think it might be a next year thing, but with really like companies and protocols shaping up over this year.
I mean, things like Hyperliquid, I mean, they are definitely changing the perspective a bit. Nobody imagined a DEX coming out of nowhere and doing such remarkable volumes when it comes to trading and handling it at such a scale. And now when we see DEXs, our perspective completely had changed. Earlier, we used to see at them as some form of slow and very low volume and liquidity kind of a play. And Hyperliquid has completely changed it. And we are seeing other DEXs also trying to kind of do the same. So, I mean, AI plus payments, I think that's going to play a huge role again, because I do see a lot of micromanagement, lot of intermediaries getting out because of AI as well. And then it's a perfect combination when you have blockchain running automatically on AI agents. I mean, it's like, we can see that. When it will be done, I don't know yet, but it is very visible.
Marc, strongly agree.
Marc, I know I have taken more than the decided time. I'm really thankful, and I'm sure that this was a very fruitful conversation, not only just for us, but also to the people who will be hearing this. I personally wanted to do this with Polygon because I've been following you guys for now almost 8-9 months. You're doing such an amazing job. And I thought this needs to be known. This needs to be put out there so that at least people can see. And the kind of messaging you have done on your website, it's amazing. You are directly letting people know what you're about, what you're doing. So Marc, thanks again. Thanks a lot for sharing this information today.
Yeah, thank you very much. I appreciate you having me here, and it's a lot of fun.